Hey Christian, how does owner financing work?
Yeah, so if a property owner owns the property outright with no mortgage on it, that means they basically get to decide the terms and become the bank if they want. So you go to them, you say, hey, what would this look like if you were to finance for me? And they say, I might want 10% down instead of 20, 5%, 6%, whatever. You can make up your own terms. And that's the cool part about seller financing, especially multifamily real estate. You get to decide how you want to make the deal work. So the reason why a seller might want to do this is if they've held onto a property for a long time, they've probably taken all the tax benefits and they don't want to pay all those capital gains by selling the property. And if they sell it to go buy something else, then they have a lot more work to do in a property that they don't know about, when instead they could just get rid of all the work off their plate and now they just collect a check from you every single month and you manage the property. That's the benefit to them. So benefits for the buyers is that you can actually get a lot more favorable and less cookie cutter loan products. So, if you negotiate it well on the right deal, maybe you can get 5% down instead of 20%, or you can get a lower interest rate, or you can get interest only for a couple of years. The cool part for a buyer is that you can literally make it anything that you want as long as the seller agrees. Another benefit for buyers is that you don't have to fit in the box that the bank puts you in. You could have low credit, you could have too much leverage, you could have any number of things, and you can still buy a piece of real estate. As long as you and the seller can come to terms and agree on something that works for both of you, you can make any deal work.